You're welcome back. It's 25 minutes past the hour of 10 a.m. local time here in Lagos, Nigeria. And if you just joined us, you're watching Business Morning, coming to you from Channels Television. We're now being joined by Bayo Durodola. He is an economic analyst, and he'll be giving us his thoughts as regards to the Nigerian economy. Thank you very much for coming on the program. I'm going to start off with the inflation figures that were released by the National Bureau of Statistics. Then we'll move into other issues as we go on. So what was your reaction when you saw the numbers?
I'm not sure. I'm pretty surprised because a couple of things are expected to drive the direction of prices generally in December. The seasons, the festive season is something we usually have some key push in aggregate demand because of the festive season, and so therefore a little bit of an uptick is not going to be an unusual in any manner. Perhaps, but however, drilling down the numbers in terms of the dynamics on a monthly and core key drivers, we begin to see certain trends that are interesting, that actually indicate that we are perhaps seeing what some of us have actually expected for the year. However, it is important to quickly mention that the year in relation to inflation closed reasonably impressively, considering the fact that we were able to maintain the single-digit inflation at an average of 8.52% for 2013. The last time we saw something similar to that was about 6 years ago, and the effect of a combination of reasonable monetary policy, fiscal consolidation is perhaps responsible for this. We have always argued as well that it is also possible that the impact of the contraction on household, especially household demand, could also be responsible for what we have seen.
Okay, but
by and large,
okay,
it's still within what analysts will be expecting generally.
The major issue, one of the major issues, let me put it that way, that the MBS actually pointed out as regards the final figures was food.
Yeah.
It seems that we didn't have much pressure coming from the production of food and rising prices of food in general. That did not seem to have impacted on the inflation rate.
We must understand that one, the figure for the month was practically a flat movement between the previous month. We had 9.3% inflation in December, food inflation in December, which was 9.3% also in November. And but underlying, we saw that on a month-on-month, the 0.9% inflation rate for the month is higher than what it was in November. In fact, the last time we saw that uptick was far back in September when we had 0.9%. And that 0.9% month-on-month is one of the highest during the year.
Why do you think that was so?
Again, as I said, one of the reasons is seasonal demand in terms of festivity. Again, we are entering what we call a pre-planting season, that is dry season, and farmers preparing for a new period. And at this time, stocks are always very low in terms of farming and farming output, and stocks are being released at smaller pieces to the market. Therefore, we expect demand to outstrip supply of such produce at that time. Again, we are talking about the fact that during the festive seasons in December, food and related items are the core drive, actually experience demand. So that explains that uptick to a very large extent. So again, when we see the flat movement in the headline, however, 9.3% in December, 9.3% in November as well, which is flat, it hides the fact that we've seen an uptick in the month-on-month performance. And the full year or headline figures is only showing what we call an average. And I've always told people, everybody agree, that average is a very controversial measure when you put your head in the fridge and your leg, the other leg inside an oven. You're expected to be okay. But you and I know that's not always true.
Now, I just want to ask you about the people who buy these items in terms of the purchasing power. of Nigerians. It seems that not many people were able to make a lot of purchases during the festive period or the last quarter, so to speak, of the year. And did that have any form of impact on the final outcome of the figures we got?
It is not impossible. Unfortunately for us, we do not have metric right now that measures the consumer's capacity to buy, what we call an effective demand. It's really hard. However, monetary policy and economic theory, we suggest that when you have a combination of sustained tightening and fiscal consolidation in the type that we are having right now, perhaps in the last 35 to 36 months, it is not impossible that the capacity of an average household to go out there and make effective demand may have been constrained. And we must also remember the fact that right now there are a lot of backward integration and domestic sustainability programs that are going on. We've seen what we call 100% import levy and duty on rice, which is the core commodity that household consumes, and a couple of other stuff. We're seeing sugar policy, a couple of other ones are going to be falling due. We've seen rice in particular. We've seen a situation where the average price has moved per bag from 7,000 or 8,000 on the average to around 12, and some people are even saying 15 in December. And this is also a situation. Price is very important in demand dynamics, and so therefore, in response to your question directly, it is not impossible, given that the price has moved in certain commodities like this, that household may face challenges in making effective demand. It is not impossible. However, like I said earlier, the average measure actually hides a lot of key indicators that will tell us more information.
Like which indicators do you think?
You mentioned effectively right now the fact that an average household may be constrained to buy. That will be a factor of the dynamics of their income in effective time, in purchasing power factor. How much of an average naira that they had a year ago and what they can buy with it, how much is it worth today? That is a measure we've.
So you're also linking it with the value of our currency. Is that also another factor that could be an underlying one?
Well, that will relate to a large extent on import-related items. That will relate to another. But and again, if you look at that, which is bringing another factor in, you've seen a situation where the naira has been relatively stable from the official hand, and
most people go to the streets.
Even at that, on the average, aside the period where the central bank migrated to the
retail Dutch auction,
where we've now seen a serious bifurcation in terms of spread between the official rate and the rate they change and the parallel market. In the past, at least Nigerians have been able to stay within the 5% buying around the 155 rate that we have, and as at, let's say, September this year. So, to a very large extent, beyond the period that we are talking about, December right now, we've not been doing badly in relation to FX. So if we extend it to the fact that what is the value of the naira, but effectively, in terms of the dynamics of pricing, locally, without bringing in the factor that exchange rate introduces, we are saying that as the value or the effective value of a naira a year ago changed to this period, if we look at the dynamic of the inflation rate as given by the MBS, we're not really doing badly.